This is Dan Grimes with The Mortgage Angler. Welcome to my YouTube channel. Today we're going to talk about closing costs. Why are these needed? Who pays for them? And what exactly are they? Well, why are they needed? They are needed because in a real estate transaction, there are certain items, appraisal, credit report, title work, recording of your mortgage note and deed, that are required by each lender, or it is a law that is required by the government. Well, who pays for these fees? These fees can be paid for by the consumer buying the house or the seller who is selling the house. These closing costs can be paid for by the seller if you negotiate it prior to the signing of your purchase and sale. What are closing costs? Closing costs are, or could be, an underwriting fee to underwrite your loan with your lender. It is definitely going to be an appraisal, which gives you the value of your property. Credit reports will also be part of closing costs, so the lender can understand what your credit is made up of and what your credit score is. You'll also see an attorney fee or an escrow fee, which is the same thing. And this is the person who looks back 50 years on the title to ensure that it's been properly transferred. Title insurance will be required by your lender. And this is an insurance for the lender to ensure that if there's any issues down the road with the title, that it can be resolved. Recording of the mortgage, the note, and the deed is part of closing costs. These items, the mortgage, note, and deed, will be recorded at the Registry of Deeds to ensure that you are the owner of the property. Prepaid items. What are prepaid items? These items could be home insurance or prepaid interest. Prepaid interest is paid for at the closing table by the consumer if you are closing in the middle of the month, or even if you're closing on the last day of the month. So if you close in the middle of the month, you owe 15 days of prepaid interest because you own the house during the month. That's why a lot of consumers like to close at the end of the month, because they only pay 1 day of interest. Escrows. Escrows are part of closing costs also. Escrows will include your homeowner's insurance and your real estate taxes. But even though we just talked about those that are in the prepaids, these are escrows that you're setting up for future payments. Your home insurance, you'll usually typically put 2 months in an escrow account, and you'll put in 3 to 5 months of your real estate taxes. And these will help you for when the bills come in, you do not pay them. They come out of your mortgage. If you have any questions regarding these items, please reach out to me. I'm available. And as always, please subscribe to my YouTube channel. Thank you.